Yes, hello everyone. Welcome to this brand new video on my channel. And I know it's been a while, but obviously we're back now. Coming towards the end of 2022, so I've really just been ramping up the content, especially recently. There's going to be a lot to come out soon. But in this lesson, we're going to be getting straight into it and looking at institutional order flow, especially in terms of a strategy as well, how you can actually implement it and the type of rules you really do need to get into. So before we get into anything, please note this is not any financial advice and it's only for educational purposes. Apart from that, so if we had to really define what institutional order flow is, order flow is a continuous mitigations of order blocks in a certain direction. Now, this can be seen across all types of timeframes and is a method used to really achieve some high risk to reward trades. Now, if you're new to the whole idea of smart money concept, you're going to realize a lot of the trades we actually do take come from the whole idea of order flow. And that's something we're going to get into a bit more now. Before we get into everything though, guys, please like, comment, subscribe below. Honestly, really, really does help with growth. And yeah, I'm going to be uploading consistently from now on. So get back into the old flow of things. Now, if we had to define this in a sort of graphical sense as well, this is what we'd usually see. We'd see a demand zone or a supply zone, depending if we're on the other side. That's going to be hit on the higher time frames. And then from that, we'd like to see some kind of change of character, as you can see in red. And then as soon as we get that change of character, we can now see order flow to the upside. And this is typically what it's going to look like. Now, in terms of the markets as well, even as a case study, we've got Euro USD here. And this is generally what I'm going to say about certain pairs. If you are going to be trading order flow on the lower time frames, definitely stick to some pairs that really do sort of coincide with the daily cycle. And when I talk about the daily cycle, I'm talking about, what characteristics do we see during Asian range, during London session, New York session, all these types of things. We're going to get into more detail later on and everything. But for now, we're just going to focus on order flow. Now, with this example, we had hit a high time frame demand zone. As soon as we got that, a change of character to the upside on some kind of structure. Now, personally, I wouldn't say this is a primary structural point, but this would be a secondary structural point. So from that, you just have to be really careful about, where you take your profits and everything, just because you can expect it not to go on for too long. But in this case, we got that change of character, and then on the 5-minute time frame started to move upwards, respecting all the order blocks on the way up. So this is the type of thing that we do want to look for. Now, before we get into everything else, I just really wanted to, come out here and say, now it's been almost a year that I've started the whole Diamant Capital mentorship, and with the whole academy and everything. Now it's really grown to a point that I'm quite proud of, almost 800 students. And from that, so much success with all the students. I mean, the results we've had has been insane. So many students have been passing challenges. So many have finally started to see themselves become consistent. So, and the difference is as well, it's, what separates us from most of the other groups is it's that idea that not only do we look at smart money concepts, but it's that fundamental edge as well. And that's what a lot of the students actually come into for. You get access to the full course, 80 videos, both for fundamental and technical analysis. The Discord access as well is lifetime. So you do have weekly breakdowns, calls. Obviously from that, we do get the fundamental breakdowns that I send in every single week, technical analysis as well. And then of course, analysis sent from myself, the community chats and everything like that. But just in terms of the new year as well, I'm going to be upgrading everything. So I'm releasing an elite strategy upgrade that's going to be included pretty much for all the students that already have their membership. All these videos are going to be added to it as well. So it's really going to be looking at everything in a lot more detail that we've never really done before. So yeah, lots to look forward to there. If you're interested, all links are going to be in the description. And so yeah, just check it out there if you need. Now, getting into the crux of everything, the rules that you do need to know for order flow. And I'm going to be setting this out where every single time you're trading order flow trades, stick to these rules and see if they apply. Now, the first one, rule number one, order flow during times of expansion works best instead of times of consolidation. Now, this just makes complete sense, especially when you link it to the time of day and also, the whole daily cycle. As an example over here, here we're trading on the lower time frames. We've got a 5-minute chart open. Now, at the top, as you can see, we've got a buildup of liquidity on both sides of the Asian range. It gets taken out on one of the sides. Now, as soon as that happens, we finally start to get an expansion throughout the day, both in London session and in the New York and London overlap. And that's exactly what we want to see. When you're trading order flow, you really want to avoid trading any of it during times of consolidation. And when does that usually happen? It usually happens during Asia session. So in areas like these, you really want to avoid trading order flow trades. But at times where you really start to see that manipulation of the liquidity early in the morning, and then you start to get that expansion and then retracements, expansion, retracement. That's really what we're looking for. We're going to see as we get into it more and more detail, but um, London and New York is going to give us them opportunities to really get in them lower time frame trades. Now, rule number 2, order flow does not go on forever. It is not continuous. So just know this fact that once you get 2, 3, maybe even 4 mitigations, you really do have to be wary of what you're getting into. And the whole reason why I say that is because, look, once you get multiple order flow mitigations, as you can see, sort of 1, 2, 3 times touching it, you start to form this trendline liquidity. At some point, this is going to be taken as a form of liquidity. Let's just say, for example, we do hit some high time frame demand zone. You can expect that this area right here is going to get shot straight through. Hence why when you're dealing with all of this, you really want to be careful about adding to any more of these positions. For example, when I look at this area right here, personally, I would say this is too risky. And the reason is because of that formation of the liquidity just above. And just a reminder, every time you get order flow trades, what you really want to be looking for is this. You want to be looking for every time that we get some kind of, so let's just say right here, we were moving upwards and then we got a change of character right here below this primary low. As soon as we get that, now we're looking for some kind of retracement and then a continuation of this trend to the downside. Now, what we usually want to look for in order flow is we want to see a break of structure every single time. So we get a break of structure, a pullback, a break of structure, a pullback. Again here, we want to see that other break of structure and the pullback again. Once you see this too many times, like I said, what you're going to end up getting is this buildup of liquidity just above. So really do be careful. And this applies to not only the lower time frames, but the higher time frames as well. And we're going to get into an example exploring that. Then rule number 3, use order flow techniques only at areas of interest. And the reason for this is because if you're looking for order flow at random points in the chart, let's just say, for example, within an area of expansion to the upside, but you're looking for order flow to the downside for some reason, it would make no sense because you need to get to some kind of supply. So if we're in a downtrend, you want to get to some kind of supply zone. From here, that's when we can start to look at the lower time frame. So look at 4-hour and 1-hour supply and demand zones. And then from this, when we reach these areas, start to look for lower time frame order flow. Now, if you're enjoying this lesson, guys, a lot of this, all of this has actually been produced from the new section that I'm going to be adding, the elite strategy section. This is only one of the lessons that's coming up about order flow. And I thought I'd really bring it and introduce it to you guys because I feel like it'll be a key lesson for you all. So if you are enjoying it, I mean, this is the type of quality that you're going to get in the lessons. And, I only expect to keep this going and everything. But we're going to get into a live case study as well in terms of Euro USD. So this is the type of chart. Now, let me just bring it up one sec. Okay. So Euro US dollar. Now we can start on the 1-hour time frame, but let's just go down to the 15 because that's what's gonna be relevant to us. And then I've got 2 points that I really want to highlight over here. The first point, that idea of rule number 2, where you get multiple areas of order flow, you really do need to be careful. As soon as you get multiple hits at certain areas. So let's just start off from this. Now, we'll start from beginning. So let's just start on the 1-hour time frame. If you're looking at this chart right here, what do we see? Now, on the higher time frame, we're moving bearish. Fundamentally as well, this is one of the things that I always look at before I enter any chart or any technical analysis. I want to know the fundamental direction. And at the time, fundamentally, Euro USD, we were looking for sells. A lot of it had to do with the US dollar movement and the fundamentals regarding that and all of the monetary policies. But I'm not going to bore you with that for now. Just to explain this, we got first of all one touch on the higher time frame. Then we started to get a change of character downwards. As you can see, we broke our primary structure right here. As soon as we get that, now what we can do is we can start to look for an area um, to sell from, right? So as soon as we start to get that pullback, one thing that's interesting is we also, let's see on the 30-minute, we started to get this build up of trendline liquidity at the bottom. Now we could aim for later on. Now, when I'm analyzing this pair, this is what I really want to look at. I was waiting for this point of interest right here, just because, above, we've got that second mitigation type of trade, even an imbalance that has appeared just in between as well. So that's eventually going to get filled. I'm going to bring it back to the first point that I talked about. You really want to look for order flow at areas of interest. Now, for me, anywhere over here isn't really an area of interest. I'm personally waiting for the area above. So for me personally, looking for a lower time frame entry over here for order flow would be completely invalid. Another point as well. Let's go down to the 5-minute chart and focus in on this area. As you can see, what tends to happen is once you get a lot of flow to the downside, so for example, we've reached this area, broken structure downwards, it's retraced up. So this would be one of the entries. Then again, the price broke some of that secondary structure downwards as well. So any of this, and then again, entered from that order flow. Again, similar type of thing. You can start to see what starts to form is this trendline liquidity, and that's what you want to be careful of. And the reason why, this eventually is going to get taken out. And that's exactly what has happened over here. You see it so many times in the market. Again, similar type of thing here as well. You're looking on the lower time frame. That buildup of liquidity starting to form above. If we're looking on the 1-minute chart, this would have been one of your breaks structures down. Again, this one over here, again here. You're all seeing that order flow on the lower time frame. Eventually, after 1, 2, 3 hits, it started to break upwards again. So you really do have to be careful of that. Now, back to the point of how we actually enter this effectively. Now, like I said, what you want to be doing is you only want to be looking for areas at a higher time frame point of interest. So let's just say we've reached this area, it's above this buy side liquidity. And now what we're doing is we want to be looking to sell from the area. Now, personally, I would usually wait for a primary structural break. So for me, would have been right here. But for the purpose of this lesson, secondary structural breaks also count as well, but there's just a lower probability. So if we're taking that into account, this secondary structural break, we've broken it downwards. We're starting to have a bit of a lower time frame order flow to the downside. But what we really want is we want that break completely downwards and then to eventually wait for that pullback. And that's exactly what this order flow trade is. Okay, so that would have been the first entry. Stop loss just above, something like that. What you want to be doing is aiming. One of the take profits would be at that low, because essentially what you're saying is with order flow, you are bound to take that low and then to retrace and then to take that low again and then to retrace. That's what order flow is. If we take it back to that first chart we were looking at, that's the type of thing you look at. Again, let's the 15-minute time frame, let's go on the 5-minute. Again, that's the first entry. The second type of entry would be once we get that break of structure, now we're expecting a pullback. So this 5-minute chart looks quite good. We're waiting for that retracement and then to enter from there. The reason I don't look at the top one over here, as you can see, you might be questioning why do I not enter from this order block over here? And it's because on the way downwards, it's already been slightly mitigated by this touch right here. As you can see, this one over here hasn't even been touched on the way downwards. And that's exactly what you start to see here. Again, going downwards, we're waiting on this break of structure. It starts to happen, but it doesn't really fully break through it. So we're still waiting on that break. Now, from that, we've got 2 points of interest. We've got this order block right here. Again, this one over here. And as you can see, price just respects that first one and then moves downwards. Now, what I'd say is if you're trading on the lower time frame, you're going to get lots of opportunities. What you do really need to do is you need to look at risk management. That's one of the most important things that you can ever have in this type of strategy, because especially on the low time frame, you're going to get so many opportunities. Even looking on the right hand side here as well, again, that type of thing. Again, down to the order block here as well. So many opportunities. You just need to be careful of what actually happens. And again, it's just proving my point. 1, 2, 3 hits. As soon as we start to think we're getting that fourth hit, boom, what happens? It drops down. So you see, this is the problem with just sticking to order flow trades. Eventually, this is going to get taken out once you have multiple taps of that area. So guys, I hope this lesson was beneficial. Obviously, lots and lots more content to come. But yeah, this is pretty much just sort of at least an introduction into order flow, because especially with the elite strategy that I'm going to be bringing to all the students, there's going to be a lot of information to come. Obviously, I'm going to be breaking it down high time frame, low time frames as well, how to actually enter every single area. Personally, with my strategy, it's not just entering on the order blocks, it's using something slightly different, and it has a much higher hit rate and it's a lot safer. When you're entering order blocks like this, obviously you do have to be careful because you could get liquidated very, very easily. But yeah, apart from that, guys, I hope you enjoyed this video. Please leave a like, a comment below. It definitely helps with a lot of the growth of the channel. Now we're nearing 50,000 subscribers. So honestly, a year ago, I could not have imagined this growth. But yeah, guys, follow me up on Instagram. And yeah, that's pretty much it. All right, guys, take care, and I'll see you all in the next one.